Good turnaround Tuesday, everybody. How you doing, Blake? Bran, hope you're feeling better. Hi, Mike, James, Hugo, AJ. How you doing, Ryan, Laura? RC, welcome to F.A.C.E. You're going to like it here. How you doing, Patrick? Paul? Glenn? Marcus? Okay, good. Glad to hear that. Hi, Hugo. All right, so it's turnaround Tuesday. A couple of candidates. Doesn't mean it's going to work or happen today, but, we're up near the zone, approaching some very important resistance, possibly up to 52, but we're up against some moving averages here. So let me just get rid of this. Okay. So here's your daily. Oh, what happened to the daily? Oh, here we go. So approaching that 200 day comes in at 51.36, so that's still 50 pips from there. I think that the Aussie is leading the way, and also I saw something by Grega that he likes Kiwi for a rally. Perhaps Dixie can put in some type of reversal. Sure is stronger than dirt, isn't it? I wasn't expecting 104 this quickly, but as you can see, we're starting to diverge, and there are some non-confirmations. And I'd say this is probably the most important chart on the board right here, and that's the 10-year yield getting back to a breakdown. And this is a possible reversal candidate as well. So, this and the yen correlated, could be peaking. Also, what else was I? Oh, TLT. So TLT has shaken out all the longs, right? They're all out here after yesterday, and we're getting some decent pre-market action here. And there is a little bit of divergence. I know Welsh says we could go to 91, so maybe this is just drive 2. And then I don't know if we're going to get that third drive in S&Ps. If it holds here, it could still happen, but looks like it's rolling over. Nasdaq's been weaker, like usual, for a while. And gold and silver Johnny keeps marching home. Gold and silver. So can't buy it, and there are other things to trade, lower risk. So why don't I start off with Ryan? Same type of scenario as we had yesterday, isn't it, Ryan?
Yeah, good morning, Dale.
Good morning,
traders.
bro. Yeah.
Yeah, we were talking about this on the flow show. It feels like we're getting into that that orbit of the elections where things may not be making much sense for the next couple of weeks. That rally in yields, what's behind it?
There's a deficit spending from Trump, right? That's what I've heard. Is that what you're hearing?
You can shake a lot of sticks at it. The reasons why, but I think, as I said, this is becoming one of those dangerous times where you can't trust anything. Not that you can trust things most days, but if you see 10-year yields up at 420, 430, 450, there's people even talking 5%. Does that line up with what the Fed's doing? Does that line up with what the economy is doing? So I think from here on out, you've got to be a bit careful at the moment, not to trust some of these moves, especially if you're trading the fundamentals, trading central banks or whatever, because I think it's going to get a bit funky. So I feel myself moving into preservation mode rather than oh, I'm going to hit every move I see mode.
Would you also perhaps lower your time frames and be more of a guerrilla hit and run
Yeah,
trader than trying to swing trade in this environment?
absolutely. I mean,
Okay.
you showed Dollar Yen. You know, the world and his mate want to hit 152 for a short if Dollar Yen gets there. But are you going to short that on a Thursday or a Friday afternoon when you've got a weekend election in Japan that's
Yeah.
expected to go badly for the PM?
Yeah.
You know, again, that's what I mean. You've got to. It's all right having your levels, but you've got to understand the risks that are around your trading now. So, you know, if we got to 152 today, yeah, I might have a little snipe, a little big
Okay.
figure, you know, scalp. But you know, I'm certainly not going to stay short Dollar Yen running into the weekend. Quite the opposite. I yesterday I actually fancied. And I did this on my trade-off slot. I fancied buying a dip. My plan was to buy a dip, you know, get something down in
Yeah.
148, 148 and a half, and
Yeah.
run that over the election. But it's gone the other way anyway.
Yeah. So a lot of the risk is overnight for traders now, right?
Yeah,
Plus you,
overnight
plus
into
you,
the weekend.
plus you, you still have overnight risk with this. You have overnight risk with everything now,
Yeah, that's the
don't you?
world we're in, isn't it?
Yeah.
You know.
Uh, Canada diverging for drive two. I still think there's a high coming here. So what do you think of Aussie? I know Grega. I mean, the action's much better. It's got the best action today. Don't you think? I mean,
Uh,
look at that. Look at that. It's trying to bottom. Pretty good divergence in cable down here. And Euro diverged at this low if we took it out. You know, Mark Chandler called 108 when he was here in early October.
yeah,
So, that's, I think we're approaching some targets. Kind of makes sense. 400 pip move, and maybe we rally
yeah.
halfway back, right?
Well,
So,
if you just zoom out a tiny bit, you'll see that we are this 108 is a prior area. Yeah, see the bottom of your
yeah,
fib there,
yeah,
107, 77,
yeah,
79,
right,
whatever. So
right.
into that 108 zone, into that there, we got a, I don't know if this is an actual technical pattern, a little letter M formation. So we went up
Yeah,
to 112, mucked around
yeah,
in a bit, and then we've come down from 112. So yeah, euro stopped falling. You know, I always say that about a market. If you want to catch a knife, wait until you see a sign that it stopped falling. Well, we've had two tests of 108.10 and they've both held now. So there's your marker. Aussie dollar,
right.
yeah, that may look constructive, but we've just nicked that lower low down towards 66.50. So it's not ready to bottom yet, in my opinion. It could bounce, obviously, from here.
Yeah, yeah.
But your main test is now 6,700, and we can't get through that. So
So wait
if you
for
want to,
6,700 and get long.
yeah, or you try it down here. You know, again, you've got that traffic area just in September where we were before the rally up to near 70. So those are the places you can try maybe a low risk, small trade, just a little feeler, 66.50 long, and below 35.30, you're wrong. You don't need to bet the farm on it. And if you bounce, then you bounce. If you can't take out 6,700, you know where to get out the trade. So yeah, I'm talking cautiously, and we were talking very cautiously on the flow show, but that's not to say you don't have to trade or you have to stop trading. Just know, what type of sea you're jumping into. Is it a rough sea or is it a calm sea? At the moment, it's a rough sea, so you jump in with a bit of caution, don't you?
I'll jump in with my ducky inner tube. Just in case, man. So
I'll pay for a picture of that, mate.
you got always people always looking to blackmail me. All right, anyway. I know I don't think Kay is here today, is he?
No, he's it's a
All
run his
right.
car in for a bit of
Okay.
fixing.
Oh,
All
I
right.
can't wait to I'm salivating to show you my charts. Holy
All right.
cow.
Do it.
Good
Just
morning,
do it,
guys.
Nike. Good morning, Blake.
Hey, Dale, you talked about probably, well, in my opinion, the most important markets today. like when you first came on. And I want to highlight some of the things that you discussed regarding everything, and you guys were talking about yields, and this is a global yield move. I mean, you look at yields and you're like, oh my God, yields are going up, across the board. They are. I mean, you look at again, any market out there, and it's basically pricing in less rate cuts. And you can see the 10-year. The 10-year has moved quite aggressively. Now we are at the 200 DMA here on the 10-year yield, but you brought up TLT, Dale, and this is a chart that I think is really important. And let me go find it here before I just kind of pull it. Oh, there it is. Here's TLT. We're at the 50% retracement, right? We're at an ascending trend line. And you're right, it's shaking out anybody who's long. So if you're long the bond market, this is a 20-year, obviously, but it's still, kind of stopped out anybody who is just trying to buy the dip.
Right.
Now, the other charts that you talked about that I think is so important is when you look at the dollar index. The dollar index is at the 618 retracement. And yeah, we're slightly above the 200 DMA. We're right up against previous support, is acting as current resistance. But take a look at this entire move. This is, these are the highs from back here in April to the lows in October. And we have literally just rallied in less than a month, past the 50% retracement to the 618 retracement at 104. This is big time resistance here. So when you put that all together and you go, okay, well, yields have, sharply rallied. The bond market could find some support down here. Yields might start to come down. Well, that would coincide with the dollar being at really critical resistance, which then coincides with your euro that you just talked about, completing the double top. Ryan, you just said an M formation. That Benedict in our chat room has been talking about the M formation. You got a trend line just below that comes in around 107.75. So you're starting to see really good levels from a risk reward standpoint to be on the short side of the US dollar around current levels. Then you're starting to see support in the Aussie, which you guys are just talking about. The Aussie's at the 50% retracement. The Kiwi finding support at the 618. The dollar CAD, yes, we are stretching into the Bank of Canada this week into the 139, really key level of resistance completion area. And then you take the dollar yen, which is up at the 200 DMA, which you talked about, Dale. Yeah. It's also at channel resistance that we've been, highlighting all week since Sunday, since we, the ForexAnalytix Twitter account, we found support at 149.20. We rallied 150, 60 pips yesterday as yields ripped, and now we're right at resistance. I mean, so there's a lot of key inflection points where we're at right now across the board. Now, will the dollar turn? I mean, that's a whole other story, because I look at the euro and I don't know if even though I bought some yesterday, I bought some just like literally at these levels for a bounce. I had my order to sell the euro last night at 108.40, and we got as high as 108.38, which sucks. But anyway, I look at these are levels where if we're gonna bounce, this could be it. This could be the level that we bounce. Now, again, I don't know why you'd want to be aggressively long euros here. Do you have an argument for that, Ryan?
Nope.
nor do I, and nor does anybody else. I mean, it's just, but as you guys were just talking about, a lot of wonky things are probably going to happen between now and election day. It's hard to be married to any particular idea. I want to say one of the other reasons why the dollar yen, is up here and is holding up here is we haven't heard a peep from the Bank of Japan about about where we're at, surprisingly. And
Maybe they have a quiet period too before an election, like the Fed does.
No, we had one of the, I think it was the deputy governors, Cato, speaking last night saying they don't target FX. But I think you mean the Ministry of Finance aren't popping up with comments. I think they know that there's a big price move risk this weekend with the elections. So although the officials may be quiet on these moves, if there's a big move on the election, obviously with the yen weakening a good chunk, they'll probably come out in force, and again there'll be a high risk that they actually look to intervene if there's a big move on the open Sunday, Monday. So they may
yeah,
not be squawking, but don't believe they're not watching.
and look at all these yen pairs and what key levels of resistance we're at. What, whether you're looking at, sterling yen, euro yen. I mean, we are just really knocking our head up against so many key resistance levels here. And I'm sure they're looking around going, wait a second, we can't let this get too far away from us. And you're right. I mean, maybe that's it, Ryan, that they're like, we have to be vigilant and be waiting, because if not, and yields continue to move up globally, you're going to see probably these yen pairs continue to surge higher, and they're going to have to try to mitigate that, right? I mean, you can see they're all right up against, pretty key levels of resistance, and what happens if the door opens to the upside? I mean, they're gonna have to try to shut that as quick as possible, right? So I don't know, and I'm surprised they're as quiet as they are. But as you pointed out, maybe it's because of the election, maybe because they know what's coming this weekend, or sometimes, it's kind of like, I don't, this is probably not, actually, I was going to use an analogy, not a really good analogy, so I'm going to just forget that. But sometimes, if they're going to act versus, how you'd give warnings, like they've given enough warnings, they might be also scheming a plan right now to intervene. And
Yeah,
that might go ahead.
yeah. I was going to say, remember Parliament's dissolved, so a lot of the comments we get from Ministry of Finance ministers isn't them just popping up on the press to issue that comment. It's speaking in Parliament, it's speaking in engagements. They're not doing that because Parliament's dissolved, so we're missing that side of things. But as I said, they are going to be watching it, and if we come in on Sunday, it's been a bad election, and we're trading 155. You betcha they're going to be coming out, and they're going to be hovering around, and maybe even intervening if it's a real big move.
Yeah.
So yeah, this is a litmus test for what we're starting to see for the US election, these Japanese elections, how the market might move out of kilter with all fundamentals and everything. And as traders, you've got to decide, has something gone too far or has it not? And do you want to try fighting it or do you not? And but you got to pick your moments. I won't be doing anything in yen come Thursday, Friday, running into the weekend unless it's just a snipe.
Gotcha. I want to also point this out, like this in the ForexAnalytix chat room. Gavin was posting a bunch of. I'm just going to show you some of these earnings that are out. GE, GM, 3M, Kimberly-Clark, Verizon, all really good earnings. And again, this is in the ForexAnalytix chat room. All good earnings, and yet, equity markets seem very well. They're down a little bit this morning, but it seems that the market's pretty complacent up here, and that's I don't necessarily think it's a good short, so to speak. But when you're having all these earnings come out, and they're pretty damn good earnings right now, I wonder what's gotten under the skin of the market at these levels. My opinion, it's probably this move that you're seeing in yields. I mean, you're seeing this big move in yields, which is basically the market's proxy of just saying, hey, we're not going to get as many rate cuts as you think.
It also
And
makes valuations tougher because of the competition from yields.
Yeah. I mean, yes, of course. There's other, alternative vehicles that you could be in. Sure. Yeah, that for sure, Dale. I agree with that. And like I said, I don't necessarily think that the market's a short. It's not showing you that hand at this moment, but we do have to, I think, start thinking about the valuation prospects of the markets at these levels. And I think about that post-election because everybody, and you guys did talk about it on the Flow Show today, and this is something that I think that we've all got to be considering. And Dale, you've been talking about this for weeks. The market's really pricing in, at this moment in time, a Trump victory. And I'm becoming more, as the days go on, Dale, more and
Yeah.
more of a believer that if there is a Trump victory, the market is really, really positioned for it. And you're going to see some major reversals afterwards. And we don't know if it's the night of or
Yeah, I
the
think he
couple of
sold
days
up the
later. I don't know.
yeah, I think he sold up the deal at McDonald's the other day, putting on the apron and working the fryer. I think
and,
that closed the deal, believe
and
me.
totally trolling Harris. Saying that
Yeah, that
she
was
never
funny.
worked
That
there.
was funny.
It's
Yeah,
funny. I mean, come on. Yeah, it's some
yeah,
funny stuff. I mean,
yeah,
he's good at
I
what he
like
does. I mean, there's no denying that. Anyway, but regardless, jokes aside, I do think that some really great trading opportunities are going to arise after this election, and I think we have to go in just understanding where the market is positioned because who wants to sell their stocks right now? Like if you own equities, you're like, well, look, man, if Trump wins, we're going up another 10%. Like, why am I going to sell here? I mean, that is basically, for all intents and purposes, the market's attitude at this point. And the more that the betting market suggests that he's got a really good chance, the less likely people are to sell at this point. So now I think the market's extremely complacent. So, on a win, I think we might see a good spike up to sell into. And because that this market will be, or this election will be contested. And even if it is a Trump victory, it will be contested. And the longer it stays contested, the more disruptive that's going to be to the market. So I think that a Trump win, whether it's the night of or the day after or 2 days after, we're going to have to look to sell into strength. And that's kind of like my plan moving forward. And obviously we'll formulate it as we have. Let's see. We have exactly 2 weeks to the election, so it's going to be an interesting one, guys and gals. It's going to be a real interesting one. And so anyway, we have a few minutes. Today's we don't have a lot of data coming out today. Just FYI, if I think we have a couple of Fed speakers today.
Philly services.
Oh, and we have Philly Fed. Is it Philly Fed?
Yeah, the services number that's not on any other calendar.
Oh, okay. And then you know what? I saw that on another calendar. Let me see. Richmond, we have the Richmond Manufacturing Index.
Yeah,
That's
Canada,
coming
Canada
out.
PPI.
How about Bailey? Is Bailey going to say anything this morning? I mean, that's in exactly 1 hour from now. What's Bailey going to talk about, Ryan? And how do you feel about Sterling at this point?
I'm still in the same mode. I'm not going to buy it ahead of the budget. I think this is another one that's being impacted by the budget news. There was just an exclusive piece out just before the show started that Reeves is going to target the likes of Amazon and big companies with higher taxes, which is never good news for the quid. So that's probably why we've just seen that little dip in the pound. So yeah, I think we're going to see the pound on the back foot into next week's budget and then see how it reacts to the budget. So definitely not going to be buying it. As for Bailey, who knows? He could add to his comments about being more aggressive and activist on rate cuts, especially after the CPI report last week and the rest of the data. So yeah, is he gonna cement a cut for the next meeting and following meetings? And is it going to be a 50? Who knows? We're playing that game again.
Yeah, all right. Well, yeah, I just wanted to see if he's, if we should be on the lookout, especially with the budget coming up, I guess, at the end of the month, right? That's going to
Yeah.
be the one of the bigger movers for sterling. Um, Dale, as you got, I know you pointed this out. I'm just gonna, I did tweet about it. I used the ForexAnalytix account to kind of tweet about silver today. Oh, and by the way, I think we have Steve here. Steve, are you here? See if
Yes,
he
I
was gonna.
am.
Hey, Steve. Let me just point out silver really quick. Just and then I know we were gonna try to get you in yesterday, and you got stuck on a phone call. Um, but oh hell, I don't know where. Well, we'll just go this way. So posted this chart in silver, which I think is pretty important. We're nearing that 161% extension, and you can see that the relative strength is really divergent as we head into this extension here. I wouldn't necessarily be a seller, a short, but if I was long, I'd be kind of aware of that, just because if you're looking at where the dollar is at a key fib level. So if the dollar ends up being supported around or turning around here, you might see a little reaction in silver. Anyway, Steve, now that you're here, and we missed you yesterday, what's top of your mind right now as far as the markets go?
Um, yeah, quite a few things. Yields is definitely, as I was saying yesterday in the morning edge, one important element that I'm tracking. I believe the upside in yields is probably capped, and if yields keep moving higher, they're going to force the hand of the Fed to go back to quantitative easing, right? Not for the right reasons, of course, as they never do. Just a reminder, they're still doing quantitative tightening, right? They've reduced the pace, but they're still doing quantitative tightening. The balance sheet has shrunk to almost 7 trillion. Of course, the pre-COVID high is far, far away at 4.3 or something. And in my opinion, the balance sheet is going to continue to expand rather soon. We're never going to reach those levels. So this is definitely something that's going to be important in the markets. Now, shorter term, I was expecting the breakout in silver. I blogged about it the day before it happened. But both gold and silver are currently testing ascending channel trendline resistance at the same time, both of them. Now, does this mean that people should be fading them? In my opinion, it's a very, very bad idea, right? Nevertheless, it is potentially an area at which we might see them take a breather.
Yeah, I mean, after this epic run, I mean, you would imagine there'd be some consolidation around these levels.
Yeah,
You
might
know,
be. By the way, 3250 for silver specifically was a very, very, very important 12-year high. We strived again and again to take it out. And in my opinion, it's not a coincidence that once we actually did it, we had that monstrous day to the upside on Friday. I had already said to the people on Morning Edge that be careful, because there is definitely a series of limit orders stuck somewhere up there. And I think those are the ones that got triggered. Why am I saying this? Because I think that any back test of 3250 is probably going to be an amazing buying opportunity if we get that.
right. If we're lucky enough to get that, that's the key. Yeah, right. All right. Well, very good, Steve. And I know Bruce Frazier here, and maybe he's gonna find or maybe even suggest that there's a couple of key reversals that he's seeing, like a Wyckoff distribution pattern in the markets. You know, the Wyckoff, you know, consolidation or a reversal, whether you're talking about a bullish reversal or a bearish reversal, some of my favorite distribution patterns to follow. They're hard to find. You know, they don't pop up often, but when they do, I like to pay attention to them. So maybe he's got some of that for you. So, hey, I just want to say, you know, guys, if you want to jump in, you know, one of the most active trading communities in the markets and chat with us, and not just, you know, the analysts at ForexAnalytix, but with a lot of traders that have the same ideas as you, jump in the ForexAnalytix community. It's only $1 for 10 days. You download the mobile app. You know, you get analysis on 30 different instruments, not just currencies. We do boons and the S&P and silver, gold, Bitcoin. By the way, Bitcoin's holding above 66,600.
I was just going to bring that up, Blake. It's trying to negate the breakout.
Well, I don't know. You know, Dale, it depends how you draw everything, but
anyway,
I know whether you're drawing it like this,
yeah,
or whether like this, or whether it was previously like this.
I had it breaking out. So
yeah,
let's see.
Let's see. Yeah.
Yep.
Yeah, it's a big one. Anyway, I just want to say thanks everybody. And Dale, I know you have an interview anyway, so
Bruce,
I want to.
The king of X's and O's is in the house.
I think there's a song. There's a song X's and O's.
And the X's and O's are not kisses like you get on a text or even bingo. It's point and figure by Bruce Fraser. So if Bruce Fraser, welcome back to F.A.C.E, king of X and O's.
You guys are reading my mind. It's all I want to do. It's all I want to talk about.
X's and O's?
X's and O's. So.
Yeah. All right. Well, you know, love and kisses to you, Bruce, and hope everything's been going okay. Top of mind, interested in what your work is showing going into this election. I remember last time you had some really high numbers for completions of up moves off your point and figures in the S&P.
Nosebleed levels.
Yeah,
so
that's right.
We'll talk a little bit more about that, to kind of a reminder, but also, you know, I'm a pure chart guy. You know, it's like in my world, reasons are optional. I just look at the charts, and I'll try to keep any kind of fundamental comments to a minimum. But I have to say, Dale, you know, really tough assignment having me come in 2 weeks before the election. It's
it is tough.
Yeah. You know, you always give me the tough ones. So
yeah. Well, I'll have you here a few months after the election too. So yeah, you know, it's understandable, and we were talking about it, Bruce, that to lighten up, maybe not to be as aggressive during this time frame until the dust settles. Who knows how long that'll take? But definitely, I think you have to reduce position size in this environment.
well, I'm going to make a case for that very same thing. So
okay, so kindred spirits again, huh?
Always, yeah. So
yeah,
Dale and I go way back, and we both have similar origins in our careers, and we always this is a highlight for me, is getting together with you and Blake and the guys, and great comments today. So thank you so much.
Thank you, Bruce.
So if people are enjoying our Wyckoff discussions, they can come check us out every week. Roman Bogomazov and I do these. We just did a free one, so come check that out. And you just go to wyckoffanalytics.com. And then the other thing I just want to point out is that I'm going to do a workshop special with Roman, kind of a once in a lifetime thing, where I'm going to do, for those that are interested, a workshop, two parts on long-term campaigning. And you'll see why as we talk a little bit more here. But you all went to the 10-year yields, and I just wanted to just sort of look at the bigger picture I think it's very interesting right now. And Dale, this is a chart from August of 23, and you can see 22 to 23, there's this big accumulation structure after a run up. Now, you're looking at yields, not price. So what we're doing, and point figure works so well on yields. And you can see that we had a target of 480 to 520. And we did, in fact, go right up to 5% on the 10-year, and then a very sharp break. And that is always a clue when you get a sharp break like this, that that was a really good point and figure count objective. And something has changed. You know, we have a range bound condition at the best, or in possibly even a downtrend of sorts. And so here you can see that we went down slightly below. In this case, we formed a redistribution, and we went just one box from hitting our objective right here, and less than 10 basis points, and then a rally. So I think that, listening to your comments, that I completely agree that what may happen here is we may get a pullback to, again, back to the target zone and build a bigger count. And this bigger count could potentially lead, this is a little too early to tell, to a more a bigger and steadier advance of yields back up again. Maybe not to the highs, but let me tell you why. So now here is a 5-year yield study, and this is really I work off of this time. This is daily. It's one box reversal. I'm trying to pick up swing trades. This is great for trading yields. And you can see that we have a count here that fulfilled beautifully exactly at 490. And then we had a distribution count. It went exactly to our objective. We did another count and missed it by 10 basis points less than. And then a distribution count, which gave us lower yields. We went down. Now let's bring this up to date. And this is the Fed's rate cut, 50 basis points. And Dale, I think that the Fed had a huge overreach there. You know, they never cut 50 basis points unless the wheels are coming off the economy. And they cut 50 basis points, and right before the election. So it has kind of a tinge of being political. I don't know. Nobody knows.
Or could it be, Bruce, the financial equivalent of Bush's trip to the aircraft carrier, mission accomplished? That was premature, and he's now stuck either with possibly not lowering rates or even have to reverse his course. Is that mission accomplished? Was
completely agree.
Hubris, wasn't it?
Well, you know, I think part of this too is they just want to get their borrowing costs down. And, you know, their big push was getting inflation down to that 2% level. And they cut 50 basis points when they were still well above their targets.
Right.
And so a little premature, I think. And I believe the effect of this is going to be, one of them is going to be that we're going to have higher inflation next year. Now, will it be to the high levels that we had a couple of years ago? No. But it wouldn't surprise me if they're not fighting inflation in 2025.
Not if Trump is elected, because Powell will be gone.
That could very well be too. So
he'll find his own Arthur Burns to finance everything. Don't you think? He'll put Arthur Burns in there.
Well, we laugh because Arthur Burns
What?
Yeah, he
How
gave
about
us the
George
inflation of
Burns?
the 70s. Yeah,
Yeah,
I'd,
how about George Burns? You know,
I'd
so
rather have George Burns. We're dating ourselves, Dale.
that's no secret anymore, Bruce. We're ancient warriors, buddy.
We are, yeah. All
All
right,
right, go ahead.
but is this all bad news? Not at all. And this is a decennial pattern, and it basically is just lining up, going back to 1897, all the years that ended in zero in the decade, the ones, the twos, the fives, the sevens, etc. And Dale, it's remarkable to me. I think I've shown that here before, how closely we are following that roadmap in the current decade. And so here we are in the fourth year, and this is a sideways year after a good run up off of a second year low. It's exactly
Right.
what we got. Look at the family resemblance between our Wyckoff accumulation schematic, one of them anyway, and the decennial. They look so similar. Well, this is what the fifth year looks like. So if the
I'll
Fed, yeah, the Fed kicked us off right about there with a 50 basis point cut, which is like, a shot of adrenaline. And yes, we may get higher inflation next year, but we may also get the best year of the decade for the bull market. And
Yeah.
so I just want to give you that backdrop
Yeah,
for
because
the
a
big,
lot of people think if you didn't, maybe they don't look at charts, but they think that 2025 could be a year of reckoning, and that a lot of things have been held together through this election
yes.
cycle. But
Now,
this is more bullish. This is more bullish than someone who I thought was an uber bull looking for 7,000 in the S&Ps a while ago. This you're talking about probably what 10,000 in the S&Ps.
it's so hard to tell, but interestingly, the decade that really had a family resemblance to this, and many of them do. I've gone back through every decade as far back as there's stock market data. And one that was really close was the 80s. And so
Oh,
there
from
were many that
82
were,
on. 82 was
yes,
the birth of
82
the
on, that was the low.
right.
And then absolutely. So you could line this up and look at the 80s, and it's pretty interesting. But from a Wyckofian perspective, Dale, this is a big accumulation, as
Yeah.
this is. And of course, this should produce a point figure count. And so let's in fact do that. I want to show just quickly one other seasonality chart, and that is, I go back with, and thank you SeasonX for letting me do this work, is I do the seasonality for the year of the presidential cycle. So last year I did the third year of a presidential term. Last year was amazingly accurate. This year, election year seasonality. The red line is the S&P 500, and the blue line, a little harder to see, is the seasonality chart.
Okay.
And they look a little different. The highs and lows are a little out of sync with each other at times. And you can see here, this one lined up pretty well. And then the low got pretty close and so on. But the big thing was, look at the tone. The
Yeah.
tone has, I think, been very consistent with what the market has done. Now, you all had talked about the idea that there could be a little bit of a reckoning coming into the November election. And I think that this lift that we got since September is really a function of the Fed. The
Okay.
Fed gave us like that shot of
So
adrenaline,
it
and I think,
overcame the seasonality.
this is what I'm thinking. But also I wonder if it just comes later and it's briefer. Maybe it comes like Blake
November.
had said, yeah, Blake had said, this election is not going to get certified right away.
Right. Yeah.
So maybe the trouble comes into November,
Then
and
we
it's not
blast
till we get
again.
later in the month before it gets resolved.
Yeah.
And
Interesting.
so
Okay.
that seems to be the way the year's going. And the only other thing I'd point out on this chart is October is the worst seasonality month of the year, and November's the best.
And so far we're up in October.
Yes. Yes.
So we could still shake the trees going into the end of the month and into the
right.
election. And if we do shake the trees right away, you'll hear crash talk, and it's not going to be a crash. Well, maybe it's 5%.
Yeah, right. It could be scary when it happens, but it's um, a tempest in a teapot. So
it's probably going to happen on the retaliatory strike by Israel on Iran.
very well. Well, there's all kinds of
triggers.
Well, I mean, here we have China surrounding Taiwan. We have, I mean, there's all kinds of things that can
Did
come
you
into
know
play.
there are 2 months a year, Bruce, where the Straits of Taiwan are the most conducive to an amphibious assault, and one of them is October, because the seas get very rough. So there's one in the fall and one in the spring. I forgot
That's
the one in the spring.
fascinating. Very interesting.
So I, when I heard that, and I know what, still can remember what month we're in, it made me think, could they be getting ready to make a move? And what can we do with all the uncertainty around leadership here?
Well, and we have war games going on in the Pacific
Yeah.
right now. So we have a number of countries engaged in this, and it's all related to Taiwan. So there's all kinds of tension.
Yeah. I'll just leave it with one thing that's different than your stuff. Do you believe in any astro stuff, Bruce? Are you
Well,
pretty devoted to Wyckoff?
I've certainly seen and studied that in the past. I'm no expert, but I've known a number of people that have done great work in that area.
Yeah, well, I interviewed this gal, Margot Amala, and that's what she does. She knew how to trade. Anyway, just to put it out there, she did a chart comparing December 1941 with what we have this December 7th. And she said she's never seen more of these clusters at that time. So just a day to be aware of.
Wow. Wow. That's really interesting.
Because we've been whistling past the graveyard forever. There's got to be at least one freak out, don't you think?
Absolutely. And that maybe that is this seasonality dip right here as it comes out here someplace.
Yeah.
And so and you just can never know about these things, but very interesting. And I'm going to make a case right now for why I think caution is warranted at this time for the reasons that you just described.
Yeah, we're in the extreme greed, not the extreme greed, but we're there.
We're there, and I'm going to show a couple different measures, and this has me anyway wanting to be low to the ground, and for on a more swing trading intermediate basis, even though I'm going to talk a little bit about the longer term. So anyway, we can see here extreme greed on the fear and greed. This is a great little indicator, but look how long we've been up here now, this yellow box over here. And there's a tremendous amount of optimism, and optimism normally gets corrected. And we look at sentiment as environmental. and it's not a perfect timing tool, but the environment is very, very important. And then we
Sure.
turn to Wyckoff for our methods
Yeah.
for timing.
Yeah, you got NVIDIA making new highs. So, you know, even guys like, I think it was Druckenmiller, relenting about his regret of getting rid of it too early. So, you know, there are the seeds there for some kind of shakeout here.
Right. And now here, this is equity call put. So what I did is I inverted it so that it lines up with the market better instead of doing a put call. And Dale, you'll notice that blue line is a 10-day moving average, which is really kind of what I focus on. But look at these two spikes here.
Yeah.
And so you can see that the equity put call is now showing a tremendous amount of call activity and has moved the 10-day moving average up to the highest level of the year, and somewhat of a bell ringer. And again, to see that kind of optimism in the marketplace, I think automatically argues for tightening stops, being cautious, etc.
Yeah, and I mean, look, if you're bullish, you want to hope this happens because everything will get cheap, even miners. Everything, even things that are performing, may
Yeah.
come off in this environment. So get your shopping list together.
Oh, exactly. We love when the market gives us opportunities to buy, you know, at good values. Now, this chart is, I'm not going to get a lot into it because I know we're limited on time, but so you can see here, this is a long-term secular trend chart using Wyckoff-ian trendline technique, going back to 2010 on the NASDAQ 100. And at this time, you can see that we are overbought and throwing over this long-term trend channel. We call this the overbought trend line. And this was back during COVID, which I think was a unique in the ages for extremes of optimism. And if you look down here now, this is actually put call on the bottom. It's so when it's low here, it's showing extreme optimism, and when it's high, pessimism. And look where we are. It shows that now the other thing is this is really long-term data for put call. This is a 10-week moving average of the ratio. No, I don't know anybody that does 10-week moving averages of put call, but note all these touches, Dale.
Yeah.
And we had this extreme during COVID, but that was helicopter money, you know, by the Fed back then. Not going to happen again. But here we are touching levels that often coincide with at least corrective tops, like right here.
Yeah.
And
so
yeah.
If we negated the throwover, that opens the door for the lower blue trend line.
And you're way ahead of me, because yes, we want to watch for a break back below. And really, quite honestly, the NASDAQ 100 is weaker than the S&P.
Yes, it
because the Mag 7 stocks are being reduced in exposure by institutions, and that is flowing over into other areas of the markets right now. And I can just show you visually. But here you can see this is a chart through Friday. This is the S&P. Now, just people screen capture this. This is my note taking for the market using Wyckoff. This is how I keep track of my thinking.
Oh,
And
thanks for sharing that, Bruce.
so yeah, people are
that's
going
an
to have to
order.
go back.
Take a
Say,
screenshot.
sorry, Dale.
That's an order. Take a screenshot right now.
Right. And but this goes to your point, Dale. Look at the throw over here.
Yeah.
And so this throw over, of this upper supply line or overbought line, if it comes back in again, then this could produce some volatility in a downward, in a decline. We have an overbought market. So this is stocks above their 50-day on the New York Stock Exchange right here. And you can see that we're overbought and we're diverging, meaning that we're not making higher highs with the index itself.
Have
So
you
the
looked
number
at the
of
weekly momentum? It's even uglier.
it's even uglier. Interesting. I don't have
you
that with me.
All right. Well, that's your homework assignment.
I will. I wrote it down.
All right. All right. Weekly.
So
Those divergences are glaring. You don't need your cursor to see that we're putting in lower highs of momentum.
So when you get the third thing here, Dale, which is directionality, then you have the sun, the moon, the stars lined up, thinking of astrology or astro, whatever is once you get the downward trend going, it's oh boy. So we have two of the three conditions. We start to break down through that overbought line, we could create some volatility, and with that, I think the directionality would kick in. And there's a closer look, and that is actually through yesterday. So you
we're
can
on the
see,
verge.
see how that yesterday we did go down and touch that line, and then found support.
Okay, well, we took out yesterday's lows today.
So there you go. So we're now at least below that upper line right there.
Yeah, negating the
So
throw over. Okay. Really quality stuff. Yeah. Okay. Then after this happens, then you could be looking for targets. So get ready to buy the dip.
yeah. So just real briefly, I've shown this chart here before. This is a chart I did in January of 23, and everybody but Dale thought I was certifiable. And you can see I took this count. This is the accumulation structure I showed you the schematic of earlier. But this count objective, if we take the whole count, counts up to 6550. And of course, we are not there yet. So I just wanted to just show this historical chart. And so now let's kind of bring this up to date. So this is the same chart area, but the scaling is 50 points instead of 25. And you can see also that how this just launches out of this accumulation area after we had that last pullback, which was on that prior chart. And this count takes us up to now, just because the scaling slightly different, 6350, 6700. So that could be, and the other part, Dale, is this count could, following the rules, could be made a little bigger. So you had made a comment about 7,000 plus. This would do it. This would do it. That bigger count. So in Wyckoff, we say stop, look, and listen. And so when we hit those targets, if we can hit them, then we would watch to see if new accumulation or reaccumulation structures get built to get to the higher targets.
You did it again, Bruce. Every time. Listen, I think it's important you give us that screenshot again about what you and your partner are going to be teaching, because I guarantee you there's people that are going to want to learn from you like I do and we do every time you're here.
Well, you're wonderful. Let me just show you one other thing. This screenshot this, everybody. This I wrote a blog about this gold chart. This is monthly bars back in 2018. So you can go read this at stockcharts.com, this blog. It's free. It's not behind the paywall. And here's this beautiful Wyckoff accumulation. This is what's happened since. And this is just counting. a portion of the yellow shaded area. And so that is how much potential we have. Whether we get there or not remains to be seen, but so far so good.
Yeah,
So,
we
and that
will.
doesn't even count the bigger accumulation that's underneath
Yeah.
it. So,
Then you get 5,
yeah, exactly.
right?
So,
Okay.
let me see if I can get back to the beginning here, and I'll just put that up as we say goodbye. So,
Really a great conversation today, buddy. There it is.
it's always so much fun to get together with you all.
Yeah.
And
I love
you know,
being able to, talk to you about an alternate. We have to look at both cases, right? As good traders, we may have a, technical bias, whatever it is, a narrative we've embraced, but I'm always teaching that people also have to consider the bear case if they're bullish. So they're aware of a shift beginning to occur. If you're just a, raging bull or, a blind bear, you're not able to change your mind because your mind is closed. So keep an open mind. It will keep your account open.
wiser words were never spoken, and that's wisdom for the ages right there. Thank you.
Well, so dates and do people have to make reservations to be there, or just show up, or how did they attend the webinar?
There's one that we did just a few weeks ago that's available via Wyckoff Analytics and YouTube. You can go to the
Okay.
Wyckoff Analytics YouTube page and go watch there. This just is very recent, and just learn more about what we're doing. And then, of course, if people want to sign up for long-term campaigning, which is very specialized, it's
Yeah,
for
and
people that want to find good technical campaign stocks and then hold them for the duration, and
yeah,
which is one of my favorite things to do.
yeah, and if we have this, little bit of a cleansing into the end of the year, then it's set up to, blow off into the spring or summer again. So,
Exactly.
yeah, so a perfect environment for that type of campaign trade that you're talking about.
And I
So,
think Blake's comments were so good. I mean, it's just like I can see 2 or 3 different scenarios where the market would not be happy in the post-election period, and where
okay,
it would, and mainly it would be uncertainty. And Blake really presented it better than I could, but that we have, uh, all the conditions for a correction that could disappoint all the optimism out there, and that could give us into the later part of the fourth quarter a correction that could be very viable.
yeah, maybe people might remember their history if they're not learning their history on TikTok. Like Bill Maher
This,
says, the history is that tariffs were a major contributor to the depression in the 30s.
there you
They're
go.
not great because
Yeah.
tariffs are not great for the economy,
That's right. And
especially if we
so
have supply chain disruptions from who we're trying to punish that has leverage over us by having the production that we have not rebuilt in this country. So,
I think, and just as a concluding thought, because Blake mentioned this, is that go back and study the 2016 election, because it was a huge surprise that Trump won in
yeah,
2016, and the market responded bullishly. We have
not at
this thing in
first.
markets, rule of alternation. And
Yeah,
so
right.
what if everybody's anticipating, as Blake said, a Trump
Yeah,
victory,
right.
and you have all this optimism, which wasn't existing in November 2016, and it's got to be corrected.
It'll be
I
the
mean, think
opposite.
about that 10-week moving average of put call.
Yeah, yeah. There's going to be some great, uh, look, it's happened. We're getting like moves in silver. We're getting, I mean, moves that I haven't seen for years. So, I mean, VIX 60 since you and I last talked. There's a lot of aberrational kind of stuff going on, Bruce, that makes me think there's an issue with market structure.
Right. And also, I really think that the Fed just did a massive overreach with 50 basis points because they effectively, I think, threw gas on the fire of prices.
Remember,
And
oh, go ahead, finish.
no,
Yeah,
no,
go
no,
ahead.
please.
No, do you remember a guy named Trader Vic?
Oh,
Vic
yeah. He wrote a
Sperando?
great book. Yes.
Yeah. All right. Well,
Yeah, read it.
I interviewed Vic and I said, so Vic, do you think the Fed is making a policy error? And his comeback to me was, Dale, the Fed always makes policy errors. Okay. I mean, that was really classic.
Well, and so true.
Yeah.
Some are
Anyway,
bigger than
buddy,
others.
I could talk to you the rest of the day, but I know you have things to do too. Great presentation, and we'll talk again in January. So,
Wonderful.
I hope everything goes well for you this quarter, and
Thank you.
your family and your friends and associates come through this like the rest of us unscathed.
It's great to be with this wonderful community and say hello to everybody and thank you.
Bruce Fraser, everybody. Follow him on X at RD Wickoff or Wyckoff, depending upon how you want to give the Y.
There it is.
And he's teaching. You don't know how rare it is to really have someone with this kind of experience to teach, for you to learn. Take advantage of it. And don't just count your pips, count your blessing. Okay, German is Wyckoff. Okay, thank you guys. All right, Bruce, take it easy, my friend. That's a wrap.
Thanks, everyone. Take care. Thank you, Dale.
All right, you're welcome, Bruce. And you could join the team in 8 minutes on the Morning Edge. And if you're not a member yet, spend $1, get in there, and have a good week with them. Adios.